I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. Here we are, Friday, and chatting about the market. We should be so lucky.
Bob, what's going on with junk bonds?
Oh, it's been a good market for them. Mind you, in dismal December, they got hit, along with crude oil, and there's quite a good connection between crude and junk bonds. And they've had a nice rally up until a few weeks ago, and with crude oil price come down. But there was a headline here that junk bond sales surge. You know, they're underwriting them. And then you've also got, let's go back to the junk bonds and crude oil, that they both here. Now, crude, as of today, or yesterday, has broken down below the 20-week exponential moving average. That's not good. And the junk bonds have done that as well, which is not good. And we thought that it would be after mid-year when these things can turn south. Crude oil itself, it can maybe trade sideways in here for a while and chop around through the summer. But again, we're going to look at the probability of crude having a serious low down in December and January. So this lower grade bond side is had a nice rally, became somewhat overbought, and is now breaking down, and this is not good. It's not good for the whole stock market as well. And then the other one was about all these IPOs and new stock issues they're doing. And they got some great headlines there. The ones that I look at have been, we looked at the history of new issue markets, and I know in the history books, there was a great one in 1962, and went into the history books as the great garbage market of 1962, where everybody was so eager for new issues that you could just float anything. And myself, I was on the equity desk of a regional firm here in Vancouver in 1968, when that bull market peaked and you had a strong new issue market. It was incredible. Fortunately, I was playing it because they were getting doubles and triples out of these things. But the hotter the issue, the more people wanted it. So, but there's only so much of an issue, so we would cut the allocations back. And there we saw one customer, a retail guy, who would then put in an order with his salesman at the firm for maybe 3 times what he wanted, thinking he'd maybe get cut back to what he'd end up with. And then also we saw his footprint at one of the trust companies in town where he had accounts there, and then would put in his orders. So, and then when he got allotted his amount, of course it was never enough, because that's the case in a hot new issue market. There's never enough. And he would shout and scream and make a noise. And then along came the issue that was the end of the game. I can't remember the name of the company. But of course, he not only got filled on his triple the size order at the brokerage firm, but he also got filled on his big orders at the trust companies. And then, he, being stuck with a bad deal, he then shouted and screamed and tried to break all the deals. But So this was a learning experience on a hot new issue market, and this appears to be what's going on now. I don't know when it peaks, but there's been some big underwritings, and some have been successes, and some, like Uber, have not been. So then you want to watch for, well, I guess maybe Uber was a turkey, but there may be others yet. I mean, the summer's not over, but the issue on IPOs is that in an ordinary market, you do the underwritings and they end up being decently priced, and if they're priced right, you can have a bit of a rally on them. But then when you're in a powerful bull market and the new issue market becomes the rage, then it gets very difficult to price them. And you can do it on all kinds of standards, and then the market will bid them up very quickly. So it's very tricky to price them. And then what also happens is that where the premier brokerage would have the best of the companies to underwrite, then it works its way down where lesser brokerages, and they've got corporate finance guys, and they want to get in the game as well because there's very good fees for underwriting a new issue. And then eventually the last guy comes in and because he ends up with the deal with some small company saying, oh, well, we can price it at 20 times earnings or something like that. And then that's the last one, and it's a turkey issue. And I can remember that, it was a Elephant and Castle. These English brothers had a few pubs, and they wanted to go public. And I'll see if I can remember more about it. But at any rate, it is part of the stock market mania, and it'll get over. And this is what we've been looking for, of course, is the rally out of the dismal December would likely to go to about March, and that would include rallies for base metals. And they soared up, did a pretty good rally until March, and then have rolled over. And crude oil was also likely to rally to about March, and it had a good rally, and it got up to 66.6 in April, close enough, and it's now has taken out the 20-week EMA. So for the good things for the first part of the year worked for us, and the stocks market rallied accordingly. The junk bonds have rallied. The high-grade corporate bonds have rallied to overbought. The rally in long-dated treasuries is getting overbought as well. So the good stuff we expected for the first part of the year has come in, and in some cases, like base metals and crude oil, been accomplished and is rolling over. But for crude, we can look at this, that maybe it can trade sideways here for a number of weeks and then choppy through the summer. But because last year, that very old seasonal for crude came in where you can have a high late September or early October, and I think the high was October the 3rd. But you can count on a very good seasonal low for crude oil in December or January. And then you can also count on a very good low for base metals in, you can sort of say, November, December. So this then presents the possibility that after mid-year, our sunshine stuff of late would likely, we're going to use that term again from last year, Jim, turn to the twilight zone. And then in the fall, the discovery of, turn to twilight in August and then the twilight zone in the fall. with the discovery of some liquidity problems. So our advice to investors is to lighten up and build some liquidity, because there could be a liquidity problem in the fall. And the one last fall that ran until Christmas, it took the S&P down 20%, which was pretty severe. But within that, there were some of those big high-flying stocks that suffered, 40 or 50% sell-off. So it wasn't a good time to be long. And so now, perhaps on a liquidity problem in the fall, it may be more severe than the one last fall, or not more severe, but say more broad-based. The stock market has been way overpriced, and this is one of the things I'm working on now, is the concept of valuation.
We'll have more with Bob Hoye right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Welcome back. We're speaking with Bob Hoye. Bob, we've seen the disconnect between the price of oil and the price of gasoline in the Vancouver area, especially, where we're paying record high prices, $1.70 plus a liter, whereas oil's around $62 a barrel. And I remember when oil was nearly $150 a barrel, we paid $1.50 a liter. So that ratio obviously doesn't work out. What do you think of this gasoline inquiry in BC, where the government says you can look at everything except taxes and pipeline capacity?
You're right. The Greens and the socialist government, the NDP, when not in office, they were all for raising carbon prices and raising the price of gasoline and all that stuff, because the theme is to discourage people from using fossil fuels. And they've got this weird idea that somehow CO2 influences the climate, which we've discussed that it does not. So the then NDP and Green radicals end up as the government. So what you're going to have on this inquiry is the government inquiring its own effort to purposefully raise the price of gasoline. And the public is going to see through it and realize that these guys have just been doing smoke and mirrors and would be held accountable. So I'm looking forward to it. The other part has been the thwarting of pipeline expansion, and while additional pipeline capacity, it's hard to calculate how much it would put a lid on the advance in gasoline prices, especially when those who were out of government wanted to have higher gasoline prices. And now that they're in government, are discovering that the public really doesn't like higher gasoline prices. So it's socialism, which is always bad. But to look at the price, the seasonals for crude would be, let's say, choppy through the summer And then you always have kind of a reliable seasonal low in December, January. And we know that the junk bond market doesn't like it. We know that the stock market doesn't like it. And then you've got these valuations, and I saw a recent study done pointing out that if the Fed can lower short-dated interest rates, and that would keep the boom going. And all I know is that through hundreds of years of commercial history, such rates like T-bills go up in a boom and down in the bust. So here you have a theory that the Fed will lower interest rates and it will keep the boom going. And yet history shows that interest rates go down with the bust. And indeed, the fastest declines in short-dated interest rates have occurred with the worst parts of bear markets. So that one's wishful thinking. And then this study also related that Warren Buffett thinks that the stock market is very cheap. I can't remember the exact quote, and he also is using something about the PE, the earnings ratio, and relative to the yield on the 10-year note, which this main study did. The main study did it and then said also Warren Buffett believes this. So, fine. They're absolutely wrong on short-dated. And they've also, it may be right that the 10-year at a low yield would help, but we're getting sell signals on the 10 and 20-year bond futures. So they've been acting well. We thought they would act well into June, and they're getting overbought here now. But here, if you have an important high for bond prices and they head down, then the yields are going to go up, which then changes these permeable determinations. So I read the study, and then while we're putting the study together here now, and I grabbed some of the quotations from September of 2007, where these theoreticians, Wall Street types, were saying that, hey, everything's okay. The Fed can cut interest rates, the short rate, and it'll all be fine. But they just don't get it. The theory's got nothing to do with reality. Now here, I'm just coming up with these quotes. Oh yeah. Senior investment officer, this was Bloomberg in September the 4th, 2007. The Fed will ultimately ride to the rescue. Then here's Harris Private Bank. Lowering interest rates will certainly help the stock market. There is no question about it. That one was also dated September 4th. And the peak for the stock market was the middle of October. So this is extraordinary stuff. And now serious analysts are repeating the same folly with the study that we got the other day. So anyways, at least if you look at market history, it'll give you a guide as to where the market is likely to go, such as the rally out of December. And then if you have good technical tools, you can measure when the rally was oversold enough in December to buy it, or more recently, overbought enough to lighten up. So you got the combination of seasonal forces, major historical forces, and some working technical tools. It's never perfect, but it sure makes things a whole lot more comfortable. And as we're saying here, you have the same blunders being committed now that the Fed will save us by lowering rates, as was reported in September of 2007. It's incredible. The same mistakes are made time after time after time.
How many recessions have there been since the Fed was invented, and the whole idea of the Fed was that it would prevent recessions?
Oh, yeah. Yeah.
How many, Bob?
Nervous people in New York in the early 1900s, they did see that you'd have a stock market boom, and then you'd have the financial setback, and then you'd have the recession, which is the way financial history has worked for hundreds of years. So their thesis was if you formed the Federal Reserve, they couldn't call it a central bank because the U.S. had had two bitter experiences with central banks, so they called it the Federal Reserve System, but it was the same thing. So then they used the term a lender of last resort, and that then the Fed would be able to move appropriately and prevent the financial setbacks that precede recessions. So here you are. The Fed opened its doors for business in January of 1914, and the National Bureau of Economic Research is the semi-official body that keeps track of when you got a recession and when you have an expansion. And according to their work, there's been 18 recessions since 1914. So if you go to the great physicist Richard Feynman, and he's got a wonderful statement whereby no matter how brilliant it seems, and no matter how lofty the individual is that's promoting the theory, if it's not confirmed, it doesn't work. The theory is hopeless. It doesn't work. So here we are. 18 recessions says that the theory doesn't work. And so I think the next recession, which is inevitable because we've had a remarkable boom, the folks might look at things and say, oh my God, the Fed and the Treasury spent trillions of dollars of our effectively tax dollars in trying to make sure that bad things wouldn't happen. And then when it comes, they're going to say, well, we're in a recession. And this is where independent minds will come forward and say, the theory is not working. Well, so I'm looking forward to when that comes, and I think it will come because you're on a political movement now to reform excessive government. Popular uprisings has been the term for it. And so the ordinary folk are attempting to regain control of the political process from very powerful experts. So part of this will also be the folks looking at money systems and saying, a national currency serves only the government because it transfers wealth from the individual to the state through inflation. And I can see the public will say, hey, this system doesn't work either. So at some point, and throughout history, the most practical thing has been to have the currency convertible into gold at a fixed price. And then that limits the ambition of the state to depreciate the currency to fund grand schemes. So we're in very good times for the individual, Jim, and I think the individual can figure it out. Maybe we can call it a pending new bull market for common sense.
Well, you remember Einstein's definition of insanity was doing the same thing over and over again, expecting different results.
Yeah.
Isn't that what the Fed does?
Oh, sadly it does. And then you can take apart their concept with only just two steps. One is they assume a national economy, and they assume that national economy can be managed. Well, There is no such thing as a national discrete economy. Just take a look at Canada's economy next to the U.S. They're part and parcel. So then the idea to have a Bank of Canada that's going to manage the Canadian economy as separate from the U.S. is some kind of madness. And then the other one that they use is that by putting stimulus in, i.e. credit, then that will boost the economy. But that's what they call a primitive syllogism, where because two things that occur at the same time, they're causally related. It's the ancient one is, of course, the roosters crow at sunrise, therefore the rooster causes the sun to rise. And in the case of business and credit cycle, it's yes, with a business expansion, credit expands. But it's not causal, it's associated. But these intellectual economists have been practicing the stupidest thing possible, is that is getting correlation and causation confused. And they really believe that when they push credit out the window, that then pushes business, and it doesn't work. It is just hopeless. So it only takes two steps to destroy the logic of central bank intervention. And then, of course, you have the evidence of over 100 years where there's been 18 recessions when the proposal was that the Federal Reserve would end the financial setbacks that precede recession. So it's such nonsense, I can't believe it.
We'll have more with Bob Hoye right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink's CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, over the whole issue of Brexit, UK Prime Minister Theresa May is going to step down June 7th. What are the financial implications of all this?
Oh, not much, really. The astonishing thing is that England, after attending to military dictatorships in the early 1800s, the French Revolution and Napoleon, and then attending to military dictatorships in 1914 with Germany, and then attending to military dictatorship beginning in 1939. That was to bring freedom back to Europe and also to defend England from, an intrusion from Europe. And here they are, under what has become a welfare dictatorship. And it's astounding to see that they have surrendered sovereignty to a bunch of bureaucrats in Brussels. Absolutely hopeless. So then there was the referendum, Brexit, and there was enough of a majority to say it was a win for the Brexit people. But the problem is that Theresa May then became Prime Minister, and she was a lukewarmer on leaving. And so I think she was unable to really push it. Can you imagine what would happen if somebody like Trump was the Prime Minister? I mean, it would have been moved quite along. So, anyways, it's too bad that she was unable to pursue it vigorously. And so she goes, and the new leadership of the Conservative Party in England hopefully is strong on getting England out of the clutches of a intrusive bureaucracy in Brussels. And I would just say from history going back 2,000 years, there's been let's put it this way. Every great experiment in Europe in authoritarian government, eventually the governing classes granted themselves the privilege of state murder. And you have power-mad people, bureaucrats in Brussels, whose ambition is effectively unlimited, and you don't know how far these political forces may go. But the best thing for England would be to get out as soon as possible. And you can also do trade with anybody anywhere, and at the right price, Britain will be able to sell goods into Europe. So England should actually declare unilateral free trade in every direction and let her go, and you would end up with a prosperity like you wouldn't believe. So it's fascinating, but I think it's part of the what could be a great reform of government excesses.
Bob, thank you so much for chatting with us.
Well, there we are, and we'll look forward to talking again next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob or any of our other guests, you can send them to info@howestreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.